Hi, I'm Jimmy. In this video, we're looking at General Electric stock, ticker symbol GE. Now, this isn't our typical stock analysis video because GE has announced that they are essentially breaking up their business into different smaller companies. So the goal of this video is to see if General Electric stock is worth buying today as they spin off two of their bigger pieces of their business. Now, whenever we hear a company say that they're going to spin off different businesses, and our question is, okay, well, is it worth buying today knowing that we're going to end up with three different companies down the line? Well, a good valuation method generally is the sum of the parts valuation method, where we value each business separately, add them all up, and see if it's a deal today. So that's essentially what we're doing in this video. And we're going to walk through step by step what numbers we have to consider when trying to value a company sort of like General Electric. Now, before we start, I just want to let everybody know that we started building a website that will allow you and I to research stocks and help us value those stocks very quickly using something like discounted free cash flow and a bunch of other valuation methods. We could even do sum of the parts if the company provides the data. Now, in the case of General Electric, they do provide the data, so I'll show you how we would do this. Now, we expect to have the website up and running over the next 6 months or so. But if you decide to sign up today, we're locking in the price that you sign up for today forever. So the price of that will never go up. So if you want to sign up for that website, I will leave a link in the description below to sign up. And in the meantime, you get access to our private investing Discord, and we do 3 private live streams a week over there. Okay, now let's jump into the General Electric analysis. So this is General Electric's revenue by segment according to their fiscal year 2020. 2021 numbers haven't come out just yet, but we get an idea of the size of each one. And we can see that they have 4 primary segments. Aviation is their largest segment, and then they have healthcare, followed by power, and then renewable energy. Now, when the spin-offs happen, when GE spins off the different businesses, they're actually combining power and renewable energy. So that's essentially going to become one company. So that's sort of what the breakdown would look like. So now let's jump into the details, and then we'll see how we can value GE stock. So first up, we got GE Healthcare. Now, GE Healthcare is expected to be spun off in early 2023 into its own standalone company. Now, GE has said that they expect to maintain ownership of 19.9%, so almost 20% of this business. But what's interesting to me about it is, why not just keep it 20%? Now, one of the possible reasons behind this is that if a company owns between 20 and 50% of a business, they have to use something known as the equity method of accounting, which is essentially, it's a way that they track the revenue of the companies that they own. It's a more, if they have influence over the company, then they have to use the equity method of accounting. One of the ways to define influence is by having between 20 and 50%. Now, just because they have less than 20% doesn't necessarily mean that they're not going to have influence, so they might still end up using that, but they may not. We'll see how all that shakes out. I just thought it was interesting that they came up just short of 20%. I think the important point for us to remember is that they're going to retain some ownership in this business. Okay, now on to GE Power. So GE Power is expected to be spun off in early 2024. And GE Power is a combination of their renewables, power, and their digital business. So this is a decent sized business that has a decent amount of revenue, and GE is not expected to hold any ownership in this after the spin-off is completed. And then they have their aviation business. Aviation, GE is going to maintain control, and that's essentially what will be GE. So the GE we would own today, if these spin-offs happen, we would end up with a piece of their healthcare business, we would end up with a piece of their power business, and then the remaining GE shares that we already own would essentially be GE Aviation. Now, I also think it's important to point out that GE has about $65 billion in debt as of their third quarter numbers. Now, GE has stated that they expect to pay off some of that debt and have each of the 3 companies be spun off at the investment grade debt level. So that could be a good thing. Estimates are that they would be right around $35 billion in debt, but we'll come back to this in a minute. But before that, let's go ahead and try to value the businesses. So we're going to be using price to sales for each division to try to determine what we think each business should be worth. We're doing price to sales because GE publishes the sales for each individual segment, so we can look at the numbers and they're sort of easy to use. Now, I also think it's useful to look at some of the free cash flow numbers, so let's start there. Now, I was able to find analyst estimates for free cash flow for each of the business lines for next year. So these are forward-looking free cash flow estimates. And it's estimated that GE Power will be about 4% free cash flow. So this means that 4% of revenue will be converted into free cash flow. Now, a lot of this for GE Power is dragged down by the renewables business because the renewables business does not have great margins right now. But that's okay because GE Healthcare should be about 18% free cash flow margins, which is pretty good. And then GE Aviation is expected to be in the 17% range. Now, the key for us is to compare each business line with competitors in their own industry. So these are the competitors that I was able to find for each of the individual business lines. And when we calculate the forward free cash flow to revenue margins, on average for each of these companies, for the group as a whole, well, these are the numbers that I got. And we can see that when we compare that to GE Power as an example, well, the GE Power and renewables business looks kind of strong compared to the industry. Then their healthcare business is slightly below average, and aviation on the other hand is quite strong compared to the industry average. So what we're doing is we're taking this information and we're trying to come up with what the fair value could be for each of the individual businesses. We add them up and we get the fair value of the entire company. So what we did is the reason we're going through this whole free cash flow exercise is to try to determine basically what the premium or discount should be to the average for price to sales, since we can get the sales number from General Electric for each of the businesses. So now let's clean this up a bit, and these are the multiples that we're going to use for each business line. And again, we determined those based on the industry average, and we either added some premium to it or took some discount, took a minor discount away from it. We did that in the case of healthcare. So now all we have to do is we take this multiple and then we need analyst estimates for revenue for each of the segments. That's what these numbers are. Now I compared analyst estimates for revenue to last year's historical numbers and over the past 12 quarters, and these numbers seem very, very reasonable, so I'm okay with sticking with analyst estimates. Sometimes it's important to double check that just to make sure there's nothing outrageous happening. But these seemed pretty good. So we do that quick math, and just like that, we get what the market cap should be for each of the individual business lines that General Electric currently controls. And when we add these up, well, we get a total market cap for the entire business of about $206 billion. So that's the value for the entire company. Now, we know that we're going to want to subtract their debt, and estimates, like I mentioned before, were that the debt would be about $35 billion next year after the GE's doing a whole bunch of things. They have GE Capital. They're making a whole bunch of moves trying to pay down that debt. They had a whole Baker Hughes deal that they're selling off, that they spun off already. Basically, they're trying to lower the debt. So we're just going to take the analyst estimates and their estimates and say it'll be about $35 billion next year. And then I think it's important that we don't forget that they have some pensions that we should also consider. So for that, we subtract both debt and pensions from the total market cap, and just like that, we get what should be the total value of the company after adjusting for debt and pensions, and that would give us about $153 billion in total market cap. We take that, we divide that by the shares outstanding. That's what that number in the corner is there. We divide that by the shares outstanding. That's the current shares outstanding for General Electric. We get a fair value of about $140 per share using a sum of the parts valuation method for General Electric. And given that GE stock is currently trading at about $100 per share, well, it seems that GE could be a very interesting stock to own over the next couple of years. Now, the theory here is that the valuation will get there as the spin-offs are happening, and we saw one's happening in 2023, the other one's happening in 2024. So this is a longer-term investment if we're interested. And if we decided to go ahead and buy GE stock today, well, what would happen is, as the spin-offs happen, we would own GE, and then we'd own a piece of GE Healthcare and GE. Then we'd own a piece of GE Healthcare and GE Power and GE. So we'd have three different stocks at the end of the day, and hopefully they end up valued somewhere along these lines. Now, if you're interested in gaining access to the website that we are building that allows us to do calculations like this on a whole ton of different stocks in different industries, different valuation methods, I will leave a link in the description below for how to sign up to that. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.